Hey, how's everybody doing? All right, let's try to wrap up this week. Share the screen, get off to a great start. We'll check out we'll check out the top 20. We'll get a preview of the top 20. But let's just see how the charts finished up the week first of all. All right, so there's the NASDAQ. I was just looking at this a second ago, and this is the 30-minute chart. So maybe let's look at a daily chart. Daily chart of the Qs. All right, well, there you have it. Daily chart. All right, well, let's check out the SPY. It's getting ready to rain here, or I think it is raining. Yeah, see that 99 and light rain, and it's literally 99 degrees outside, at least, and it's raining. I mean, on the daily chart, it doesn't look too bad, but doesn't look too bad. Still wish the only thing that's a little bit concerning to me is the fact that Bitcoin's quite a bit weaker. If you think of this as a leading asset, it's quite a bit weaker than the market as a whole. But in any event, Nvidia finished the week out here. They had earnings Wednesday, right? Tuesday, sometime it wasn't Thursday. I know that. But anyway, and sure enough, they pulled back. Let's look at old AMD. Kind of the same story. Let's look at Amazon. Amazon looks more bullish than either of those two. ARK. How about Coinbase? Yeah. Coinbase and the crypto related ones just seem to be just a little bit weaker. Here's Tesla. That actually looks pretty good compared to some of the other ones. Their longer period moving average is still sloping up at least. All right, let's look over here at the crypto quartet and see how we finished out. All right, let's try to start over here on the Alti chart. Okay, blue is the weightings of each company. So, blue's the weightings, and red is how much that company was up or down. None of them were really up. So red was mainly down, but it's not designed to be that way. There was a firm was up 10.58% and is also a 5.09% weighting. But other than that, it was bad news across the board. Marvell, I mean, there was no good news. And Alti itself was down 1.39, which really, when you look at this amount, it's really not too bad. So the puts were doing their job today. All right, so let's look at LFGY. Same chart. LFGY had Bitdoor, whatever that is. It was up. Circle was up. HUD was up. I guess HUD 8 was up. There were some things that were up, but in this business, in the DeFi business, more of them are down. There's Ether down 2.2, Bitmine immersion down 4. All right, well, But LFGY itself was only down 34 basis points. That actually isn't too bad. It could have been worse. All right, now let's check out blocks. Blocks was down 1.98. This hodl was the one killing these guys. I mean, they also had Galaxy, which was down 4, NVIDIA, which was down 3. Oh, well. All right, now let's check out old, how do you think old Salty did? Come on, Salty. Well, I have a Salty chart here somewhere. It got lost in the shuffle, or for some reason I don't think this is updating right now. All right, well, so let's do this. Here's a preview on the top 20. It's YETH, OARC, Goop, SLVO, SOXY, KQQ at 6, NVDY at 7, Clip at 8, AMD at 9, XYLG got on there somehow, but and you can read the rest yourself, but that's the latest crop. The long-term list, Snowy leading the long-term list. Let's pull. We haven't looked. I haven't. Let's look at Snowy. I mean, yeah. I mean, that was a heck of a move yesterday. I don't think they're supposed to move that far in one day. That's awesome. That obviously goes to show you that Jay and them got the they put the strikeout far enough so they could still participate in upside. They don't appear to have any problems being capped out. Now, granted, they weren't up as much as Snowflake was, but I mean, I don't think anyone's going to bitch about them being up as much as they were yesterday. You definitely wouldn't call these guys capped out. It's not only the spread, it's also where they put the options. Sometimes they just leave parts of it uncapped. And I wasn't watching the specific trades, but anyway, great job. I mean, close one day at 15:02, and the next day you close at 17. Great job. Great job. All right. All right. So the crypto quartet, we couldn't get Salty working. That was kind of disappointing. I wonder what is going on with Salty. Let's just do it like this. All right. Well, let's see if this works. I need to just quit showing that one right there. But anyway, okay. So look at all their things they were short, and they were all down. I don't see one thing that was up that they had in their portfolio. But is this to be believed over here? It says Salty was. Oh, and of course Salty was up. That's right, because Salty should go up when everything goes down. All right. So yeah, Salty was up. Okay, hang on. I'm going to try. Let's try this again. I think this will make more sense this time. I took that money market out of there. I just put it at 0. There's no reason. We don't need to see that. We don't need to see that. Okay, so this should make a lot more sense. So these are their short positions. So their biggest one, you can tell by looking, was BE. There's 7% of their portfolios is short. This is salty. And sure enough, that thing was down 3.3% today. APLD also down 3+%. Look at this one, Bill, down 5%. These guys killed it. And Salty itself over here, it looks like was up 5.2%. Is that right? Or not 5.2, 0.52. Somehow, let's go back here. Somehow the it has the units messed up. On some of these, it's percentages, but then on the chart, it'll show it in terms of a number. But Salty itself was up 0.5%. I mean, that's good, but man, everything got killed. It'd be nice if it was up more than that. I guess 0.5%'s good, right? But I mean, heck, I mean, look at all these ones they were short. Dell was down 8.9%. CrowdStrike was down 4%. I mean, they killed it on their shorts. Anyway, hopefully they keep killing it. Hopefully they make 50 cents every day. I mean, that's freaking wonderful. We'll take it. We'll take it. But yeah, there's the chart. And their biggest home run was Dell, shorting Dell. And they didn't have anything that ran against them except for Enphase Energy was up a teeny bit. All right, great job, Salty. So that's the crypto trinity. We've seen the top 20. Let's look at the index buffer report really fast. And then I'd be happy to see what you guys are up to. Look at Q up. So this thing, what did Q up? They spend 1/10 of the portfolio every day on call options, but they're down 10% today. I mean, let's go. But that fund does really well and the market goes up. I mean, really well. I wanted to look on stock tools, but I don't know. I don't know if Q up is on there. There's also one called Q down, but these things are the craziest, probably the craziest fund ever invented. We're just going to look at Q up compared to the Qs. So what they do is they spend 1/10 of their money every day on call options, and that's all. So you can look at them, compare these to the triple leverage. I think these are even more leveraged than the triple leveraged. The TQQQs do it with the swap. It's probably about the same difference. What's so appealing to me about Q up is if you notice here, Q up wasn't down as much. Q up only dropped 20% right there in that pullback. You can see in the time when the triple leverage Qs, because that's about how much power they are. It's basically like they're triple leverage, but for whatever reason, they seem to have a little bit better downside performance. But anyway, I'm not endorsing Q up, but Q up is one of the ones that's up the most or down the most. But today they're absolutely getting killed. I didn't know if these funds would catch on. I don't think Q down even has $1 million under management. It's a tiny fund. Like this fund right here, Q up has 372,000. It probably has a lot less. But for a while, it had 3 million under management. And I mean, look, this thing was rocking and rolling. It went from 20 to 40. You know, I mean, anyway, that's a hardcore fund. I mean, they don't sell options, but just they're using the leverage of options. All right, guys. What do you guys want to talk about? Great review on Salty. As I seek income, plus I believe this market is going down now. I collect these funds and yeah. So YQQ does a decent job also at inverse income, but yeah. Salty. I mean, I'm encouraged that they pick some real losers if they can. I'm always generalizing everything in up market and down market, and it's a short fund. It should do better in the down market, just because it's a short fund. The other fund's a long fund, but if they do a particularly good job at picking bad stocks, kind of like they're doing a decent job of picking good stocks in Alti, maybe they'll even do a little bit better than just a roll of the dice. And I'm always just assuming, you know, rising tide lifts all ships, and it does. That does hurt it, but hopefully these guys, and I think they're showing us that. That was awesome to catch the short side of a bunch of these plays. I'm a little bit disappointed that SLTY is not making more money, but not really. And we have every trade recorded, believe it or not. I'm not tracking every trade, but I've saved them. They're in here. We could if we want to. And I'm trying to track the dividend on Salty, and to my knowledge, they haven't. It should be time for them to be X day any day now, but I'll be anxious to see what they paid because we've been watching them every day since they came out. You know, and you can see it's such a small amount of premium they're selling, but it adds up because the fund's not very big. Like yesterday, they sold about $70,000 worth of calls, short calls. And then they spent about 26 on hedges, but you know, they come up with about 42,000, but that's a lot. That comes to like 69 bips. I mean, if they could do that every day, that'd be huge. That'd be huge. That was like 34 cents a share just yesterday alone. But anyway, they've been collecting some huge premium from the short side, and it looks like their directional picks have been right too. So I mean, at least this last round was, you know, they seem to really nailed it on. So, well, wouldn't that be great if these guys, if this turns into a super successful fund? Man, that would be awesome. That would be awesome. Hopefully this fund won't get successful because the market craters and everyone has to get in it. But I'm saying, wouldn't this be great if this turned into a fund that was successful because they're like, oh my gosh, these guys are doing a great job picking bad stocks. I mean, we'll see. We'll see. Okay, let's go to stock tools. Here's stock tools. All right. So let's just put everything in the arena. Let's just throw everything in there, and who had the best one-day performance? All right, does that select all? Does it have everybody? All right, let's just line it up on a one-day performance. How about this? I don't think it would have had everyone selected. I've tried to unselect it and reselect it a couple of times, of course, but when it comes back up, it ought to work. Okay, so now they're all going. They are all going. All right, look at this. Bobo, number one. Wow. Number two is Misty. I'm not counting winner because it's an inverse, but interesting. The number two is winner and number three is Misty. Aren't those supposed to be inverse of each other? Is this just for one day? Well, something weird must have happened. Let's go to a week. Anything can happen in a day. It's the end of the week. Who do you think's the fund of the week? I'm going to name a fund of the week right now. It may be one of the Granite Shares ones. These Granite Share ones are legit. All right. Fund of, oh my gosh, it has to be Snowy, but I mean, Bobo. The fund of the week can't be a single stock. It's the single stocks are just bad ideas. That's fine. That's fine. But let's see who the highest index based is. But there's a lot of good ones here over the week. Will is the highest index based one, up 1.2% on the week, paid a 1.3% dividend. Here is IAUI that was recommended by Susan from the morning show. And this one is a really good looking fund. It's a precious metals gold fund. Let's drill down into this a little bit. There's a nice chart of it, of the total return. It's killing it. We can also look at the income analysis. There's the real annual yield and the annual dividend income. This is also an income calculator. You can put in a different amount and see what will come out. Man, I'm really liking this. The more I see of this Y-SPY is really looking good. And I have some. It shouldn't surprise me, but I almost didn't expect it to do as well as it has been doing. Anyway, all right. Did you guys see your favorite funds in there? Maybe let's go and let's do. I'm going to look at a month. We'll look at a month really quick. It is pretty much the end of the month. Well, it is the end of the month, right? Yeah, it's the last day of the month. All right. Number one is Fiat. Number two is GDXY. Now that's a good one, up 14%. And that's on an index kind of. Look at AAPW is doing great, up 13.4% when Apple itself was just up 11. I mean, that's stout. That is really stout there. I mean, that is really stout. Same thing with Bobo, though. Bobo's doing great. Goop looks good. Goop is up 10% when Google's only up 8.3. GOOW, Goo, same story. It's actually up nearly 10% when Google's just up 8.3. These ones with 20% leverage do a nice job. They do a nice job. A lot of them are on the outperformance list. Let's just pull up a list of just the ones beating the parent by the most and see how many are from that family. Okay, inverses don't count. Seppi's one we don't talk about that often, but that's that one does a nice job. All right. Well, look at YBTC. So it's on the list twice. But I don't really think this list is as important. Who cares if you're beating the parent? I mean, but yeah, it's cool to beat the parent. but the list of just which ones are up the most and down the most. Like AIYY, okay, great. It's beating the parent by 3%. It's still down 27%. But I guess that's why you have this list over here. This is just so handy. You could sort it by nav stability. Okay. And then probably anything from the top 10 here at least has been a good play. So, and look, the number one is AAPW. We were just talking about Apple, and so they get Apple ups, they get app premium like an Apple cover call fund, because that's what it is basically. It's synthetic, I guess, whatever. But then they also get upside, like it's just like a growth fund. Great job. But there's AAPY. We have some from each company. YieldMax is represented with Bobo and GDXY. But Roundhill's well represented with BRKW, GOOW, METW. Well, that one's a superstar. I mean, up 6%. What is this, a month or a week? That's on a month, but still. Well, there are a lot of good funds in here. There's that IAUI we were just talking about. All right, I don't think the indexes get enough love. So I'm going to put it on here, just the indexes. How about just the SPY cover calls? I mean, that's just as basic as it can be. Look at this. Will's number one. Devo's number two. CRF is number three. Wow. CRF, I know my friends that like Cornerstone will like that one, but that one's killing it. Then we have SPY-I, SPY-T, GPIX, T-SPY. All of these are good funds. On the NAV stability, they all have stable, and Will and Devo have stable and growing. Even Z-Hedge got a piece of the action, having a good week. I just think strategy-wise, I'm just really liking the Y-SPY strategy. Now, it's not showing up. I mean, not over that time frame. Let's drill down to a weekly time frame and see how Y-SPY does. Oh, number two, look at that. Number two, and beating the parent, showing that in the money leverage put. The CRF, though, no slouch. XYLD is popping up on the max factor also, but it's popping up here. It's having a nice little run. It keeps popping up on the max factor because they paid a one-time special dividend of like 12% or something, and it made their yield virtually double for the year. But I don't think it's fair to consider that. But then I saw a video today. One of you guys put it in there. Another influencer, obviously, but he was talking about that they might be doing that. The companies might be doing that again, and it's a good time to get in front of certain company. I mean, I guess if you could anticipate that, and anyway, and buy in front of those special dividends. But I heard funds end in October. I've heard that, I think, from Jay, or that the fund, or maybe that's YieldMax's year end is October. They have to pay everything out by October. Then other people say it's December. But in either event, both of those are coming around, whichever way the answer is. All right, I'll do whatever you guys want me to. So let's see what you guys are talking about. Yeah, blocks is going down the hardest. Well, blocks is also the most bullish. So, I mean, it also goes up the here. Let's look at blocks. Let's look at blocks. Here, look at blocks compared to LFGY. Well, that doesn't look great for LFGY, does it? All right, let's do this. Looks like something bad happened to LFGY. We'll excuse them for that. We'll try to start after that amount. But still, that's what I was trying to show. Blocks, it's just because it's almost like cheating, and I mean it in a good way, because they're double long for parts of the distribution curve, or I don't know if that's what you call it, but they're double long between the put strikes, and then they're also long via the stock. So it is a great genius fund that does well on up days, but the double long, the payoff for double long is they sell out of the money put spreads. So on big down days, they're going to have to settle those put spreads, and so yeah, they're gonna drop further than other ones of their competitors drop just on a percentage basis. I even got David to say that during the interview, and I wasn't trying to get him to say that necessarily, but he did say that. Of course, I mean, but that's the trade-off. The trade-off is in blocks, the down periods might be, you might go down 2%, and your friends at LFGY and SEPI might only be down 1%. And it's just because of the way, it's because they could have sold covered calls instead, and then they wouldn't have that problem. Covered calls give you a whole different kind of problem, right? The covered calls give you capped upside. Even when you do call spreads, it's partially capped and it's a mess. And so they don't even mess with any of that. And the only thing that changes, and really because of put call parity, really a put spread is the same thing as a call spread, and it's all the same thing really in the grand scheme of things. But it just depends on where they actually put their risk and reward. And when they put it where they have it, it's the most bullish way to put it. But occasionally they're going to have to settle up some big losers, and that's just the nature of the beast. But to be fair, they also have some of their assets they've sold call spreads on. I think that ETHA they've sold call spreads on, so that they don't have the problem on that, and they don't have the problem on the HODL. They just have the problem on the stocks, but it's not a problem. I mean, it just is what it is. But these things, I mean, blocks is just like they go up like twice as fast as other ones. You can put it on here against I mean, this thing's just amazing. Let's put it on here against the triple Qs. I mean, look at that. It's essentially it moves with the triple leverage Qs. I mean, ahead of it for large parts of the time there. I mean, that's what I'm saying. This is an amazing ETF. So I like it, but yeah, it's days like today, it's going to be on sale, but that means you can pick it up for cheap on Monday or whatever. But yeah, that's all it means. All right. So what else are you guys talking about? Okay. Thanks for the great review. But yeah, you just said the same thing as me. It always goes down the hardest. Yeah. Okay. We 100%. Unfortunately, Alti, Salty, and WPay has the potential to be the best three. I mean, heck, I mean, you have to put CAIE in there, Marcus, to be truly bulletproof. Some of those far out of the money bonds. I mean, But yeah, I mean, Alti, Salty, WPay, and I don't know. I think what it is it's Alti, T-Oak, and whatever else you want. But I mean, the T-Oak really helps also. The T-Oak mellows out, excuse me, mellows out the Alti. All right. I'm trying to catch up here. Alti, yeah. I can't wait for WPay. Should be good for Salty. I'm at Marcus. No way WPay itself will go down less than well, I mean, well, yeah, because just mathematically, WPay has to drop less than any one of them. But anyway, because it's going to be like 15 of them. So they all can't drop 10% in one day. I mean, but a fund can easily drop 10%. It can drop 10% 3 days in a row. But if you own WPay, they're going to rebalance, and it's going to be equal weighted. So it's whatever. And I think there's like 15. So probably 3, 4, 5, 6%, whatever that equals of each of them. And then they're going to rebalance at the end of every month. I mean, I think it's a winner. So you like old BRKW? Well, let's look at K Gold and IAUI. Very nice. Very nice. A very short time frame. I guess that's because which one of them's new? Probably both of them, but they're probably both new. But yeah, K Gold looks good. Let's compare K Gold to gold. Yeah, I mean, it's beating its parent over that really short time frame. I mean, that is pretty impressive. We'll check out IAUI, and it also is beating the parent if the parent's gold over a short time frame, but not as short. It goes out to June. Anyway, but both of them look pretty good. Learn something new every day. I hadn't even heard of IAUI until Susan mentioned it this morning, or maybe I had once or twice heard about it and forgot about it. But yeah, and I mean, and it looks like maybe K Gold might even be kind of better. I mean, we'll see here. Let's check K Gold out this way. Treasury bill, gold calls. Well, heck, I mean, they don't pay a yield. That's the problem with that. They've only paid 1%. Granted, they've only had one payment. If they did that, so it's 25 cents. So what is that? $3 if they paid, but it's like a $25 shot. So it's going to be like an 8-10%, which is fine. I mean, which is fine. They'll probably get a ton of upside. Here's IAUI just for comparison purposes. It's been out about as long, got more yield, but it could just been because it has more payments. But no, this one is paying 50 cents and it's $50. Was the other one was cheaper, right? The other one was paying 25 cents, but it was $25. Okay, so that's basically a wash. So many good choices out there. So many good choices. This has 55 million under management. Well, thank you to Susan, and thank you to whoever brought these up tonight. All right, what else are you guys talking about? I was going to see if there's anything else you guys are talking about. I'd be happy to talk about it with you. All right. All right. So have we looked at everything? I'm trying to think. I guess we have. I need to do my nighttime show, but you guys got a sneak peek, because that, I mean, it's not like the top 20 is going to change. I mean, that's it right there. So I just saved you time on your weekend. You don't have to. Well, that's the long-term top 20 though, but you don't have to watch the show. But it'll be fun. I appreciate if you're going to. I'm trying to make some. I can't just do the show anymore now, because now I have to design some kind of infographic. Last time it made the show better, so I got to go do that right now, I guess. But anyway, those are the results right there. They aren't going to change. YETHOR Goop Silvo. It just kills me XYLG being number 10 on the list. I mean, not that it's not a great fund. I mean, NAV return 6%. Okay, great. Total return 11.9, even better. But if the yield really was 23%, but the yield's not, the yield's like 12%. That's deceptive advertising right there. And I don't know what you do about that other than just be aware of it. But it makes me mad, because if that did have, maybe I can do that. I'll go adjust it to what the actual yield is, 12%. And then it might still be on the list, but it might be down here by Spin or by Biggie, that have had more kind of middle of the road performances. It's not going to be up there with the 23% payer. The whole deal is we all want yield, but we want it all, right? All right. So you guys got a sneak preview of that. All right, Edwin is asking a question. Yes. Okay. Well, with the Y-Spy strategy, in fact, I have it in Option Strat. We'll just go pull it up and see how they did for the week. They're selling in the money puts and really in the money put spreads, but I just like it because what I was more reacting to is check this out. Because they're using a little bit of leverage, right? And leverage can go both ways or whatever. But these guys have had really good luck with it so far, and are dogging the SPY. So I was mainly reacting to that. You can look at Y-Spy compared to SPY-I. So Y-Spy is just killing it. They're, it's since they're using leverage, even though it's not leverage. I mean, all we've seen is a bullish market, so it's not very courageous me saying that Y-Spy is killing it. But anyway, so YQQY is doing the same thing. Let's compare YQQY to triple Qs. No, it's not YQQY. But anyway, they have a whole suite of products. But back to what I was going to show you, they have a whole suite of products, and it's a cool strategy. And it's the way that it'd be the way that. Let me show you. If I was going to sell options in SPXL, which is what Y-Spy is doing, and I wouldn't even really think about it, I would just do, the old steady sell options on the SPY or on the SPX, but, for a small account on the SPY. Well, SPXL is leveraged, and you can go in the money, and you can, here, I'll show you. Okay, Y-Spy trade right there. It's a bull put spread I'm trying to think. Okay, so they do it. Just show it to you. I'll do one for next week. And we can go look at what it is, and this will probably be close to it. They'll do something like this. And what that does, that they just use two options. They don't even use the stock, but and they don't need to. It's the same. They don't need to. It's the same. It's the same as if they did use the stock and did a collar, so they could go buy the stock, and instead of selling the 199 put, they would just sell it to a call if you own the stock. Watch this. Buy the stock, sell a call, same trade. Same trade there. They both have the same max risk, which is $472, which is just the width of the strikes less the credit received. But to do it at the collar way, like ULTY does, takes a lot more money. Now, ULTY has $3 billion, so it doesn't matter. But for a small investor, this is probably what you would do it this way. You would switch that to a put, forget about the stock. You don't need the stock. It's the same trade. And you are rooting for the price to go up, because the price right now of SPXL is at 193, and you aren't capped out to 199, and you'll make money between here and there. But I did a lot of research into it. And that's all Alti does, is Alti does a collar every day. Okay, well, you can do a collar many different ways. These other funds are doing collars also. They're just doing them with two puts, and you don't need the underline, but they do have. What's cool about it is, so they do have an underline. Their underline is SPXL, and the underline is leveraged, so they get a little extra upside, and you can sure see it in the results. So I'm not saying, put all your money in Y-SPY, but I'm saying, I have it for a portion of my model portfolio, and I may want to up it. I think it's only like 5%. Maybe I'll go 10% or something, but I don't fall too in love with any of these. Alti's 20, 25% or something. GDXY, I've done well on, and some I've done poorly on. But anyway, but I'd say for 10% of your high yield portfolio, or saying you could do worse, because the other thing about this darn Y-SPY is, I haven't even made a video about it because I just discovered this the other night, but I told you guys about when I did. The other thing about Y-SPY is it pays yield too. It's for over a quarter of a year, it paid $2.30. So that's like $10, and it's a $20 asset. It's paying it about a 50% rate, which is huge. I think maybe the Defiance products pay more. I pulled up a Defiance product, and it paid about the same. It paid 50 cents more, but it was on a higher base. It's about the same. These pay 50, 60%. Y-SPY does. So they're maxing out, in my opinion, they're maxing out how much yield you can take. But I think they have a good chance of getting upside, and they've been doing it lately. And that's also what it was. There was a day last week I was following the Granite Shares trades, or I was getting a video ready, and it was actually on NVIDIA, and they had put the options trade on where they captured all of NVIDIA's upside that day. They're doing it. These guys at Granite Shares are doing a good job going way out of the money. I just think it's a good plan, and I really haven't noticed it before, and I'm sorry I haven't. All right. Now, who's talking about a bear market? We aren't allowed to mention bear markets here. Okay. Well, yeah, bear market just means market's down 20%. We just don't want an extended bear market. We want these 2-week bear markets like we've been having the past couple of years. Well, that's a good question. I don't know. Who would you guys buy? I'm just an index guy. So, it just more indexes. What I would really like to concentrate on doing more, instead of whenever, instead of looking for income strategies in the SPY, what I would really, and I guess this would be my answer, what I would start doing if that happened, if we drop 20%, if it looked like we're going to bottom and start going back up, I would do something. It could be SPXL, just for, because that's what we're just talking about. I would do something like sell a put spread. Sell a put spread every, or if not every week, every time you thought the market had pulled back or whatever. It's just a great little income trade. You know, we've seen YSPY use it really effectively. And the thing is, options that have leverage on them, it's on a leveraged underline. The market makers know it's a leveraged underline, so they price the leverage into the price of the option. So, but the thing is, when you're selling those options as part of a bull put spread, I feel like you get paid extra. But because it's the bull put spread is the same thing as a caller, it's capped, it's defined risk. You know, that you don't realize any of the bad results, but you do realize you capture the elevated IV. So I'm getting more and more enthusiastic about those. So Edwin, who do you like? T-Spy? Yeah, he is. Sai Katara. He's very sharp. Let's look at old T-Spy. You think he's beating Y-Spy? Ooh, look at that. I'm telling you, this Y-Spy is hot. I mean, it's beating everything lately. You know, T-Spy is a great one too. Man, they're both doing well. They're both doing really well. Let's compare the dividends. The price is the same, and YSPY is paying, you know, 3 times the dividend. But with T-Spy, it's about they give you just enough dividend, and the rest of it they give it to you in NAV. And this NAV is doing well. Look, the NAV's gone from 22 to 25, but YSPY's NAV has gone from 20 to 22. That's not bad. No losers here. On a Friday afternoon, when we get down to the top max factor, the top everything, these are the cream of the crop, right? But yeah, I like, I'm definitely going to keep an eye on YSPY, and I think it's also maybe YSPY specific, because there's another fund that does the same thing, but on the Qs. And when you line it up and backtest that fund against people, it doesn't beat them like the SPY one does. I think that YSPY fund is just whatever. They did a really good job. Maybe they got lucky and had a big winning trade or something. I don't know, but man, those guys are killing it. The odd thing about T-Spy is that the corporate address looks like well, it could be. I mean, corporations, it probably is. It's probably Sai's house. Sai and his wife started that, I believe. I mean, I had him on the show when they didn't even have $1 billion or $1 million under management yet. And I think he said we were the first people to have them on. But but yeah, you know, you just have to fill out paperwork for an LLC. And I mean, at the time, I think Sai's origin story was he's a retired tech executive, and he was in on a startup or something and retired, and wanted to, you know, use some of the money that he made from the tech startup in this ETF. And man, it's been really successful so far. But yeah, I wouldn't be surprised. I bet a bunch of these are run from somebody's house. I mean, people work from at home also. That just there's, you know, But so I don't think it's a red flag or anything. And I'm sure that's not what you're trying to say either. So look at these guys. They have 99% of SSG, just a SPY. Active trust investment. And then in addition to that, they have one option. And I mean, I don't even, I don't ever think I've looked at their strategy, or not in the past year, but don't they sell daily calls? So anyway, whatever they're doing it right. Paid at 12.69% dividend. They have pretty good, not beating YSPY, but they're pretty good. Look at that. T-SPY is, I mean, dividends reinvested, it's essentially tied with the SPY. Dividends not reinvested, it's right there with the SPY. Yeah, T-SPY is a good fund. Let's look and see how much money it has, assets under management. 83, yeah. I literally remember when it didn't have $1 million in it. And I mean, that's awesome to see SPY get successful like this. They say break even's 30 to 50 million or something. Depends on how big of a company you are. Probably bigger when it's your only fund. I mean, but hopefully SPY's doing well now. 83 million and growing. People love this fund. I guess it doesn't matter if fund manager trades in a soon time. Yeah, exactly. I just think anymore. I saw somebody was giving the Roundhill guys problems because they were using a WeWork or something. But I think that's probably, I bet a bunch of companies use WeWork and stuff. These option guys are all retired market makers, and money's not a problem. They all have home offices and do whatever they want, or a lot of these guys do. And they have podcasts and shows, but they can work from wherever. They can work from wherever. And really after 2020, it was no longer taboo to work from at home, because really with high speed internet, with modern stuff like you have at home, 4K video, and and lightning fast internet and great infrastructure, you can do anything from your desk here. It's anywhere in the world pretty much. I mean, so and I think employers wanted that myth to exist, but that myth got busted, and it's no longer a thing. It is no longer a thing. Well, all right, guys. So I'm going to let you guys go. Thank you so much for being here. I appreciate it. I'm going to go make my top 20 show. I have to get that top 20 show ready to go. Maybe I'll even have it on tonight. But anyway, I got to go do that right now. So I'll go do that, and you guys take her easy, and I will talk to you later.